Hello and welcome. This is just going to be a review of the trading day, April 21st, 2025. I'm just going to be going over my general thoughts on what I was looking for today, the trades I executed, how I managed them, as well as some of the trades that I was looking for and didn't take, and of course the trades that I did end up taking and all of that. So, um, yeah, I think to start off again, I just want to be hammering that in. I am really focusing on what is the higher time frame context, what is going on the 15-minute, 30-minute daily charts, where are the key levels here, and that's been really helpful, especially on days like this when we just sell off and it has there's a lot of strength, a lot of aggression, and you can kind of you can bet with a higher probability that, like, yeah, we're going to be testing out some of these levels, like, when we open up and we gap down like this. um we have this huge gap down, and then we have like 1, 2, 3, 4, 5, 6, 7, 8 straight bear bars in a row, right? It's like, all right, there's a pretty good chance we're going to test this level here that everyone's watching, right? This is the low of day from April 10th, which is the higher low after the Trump pump here. But it also happens to be, I mean, this is also just not only the low of day, but it's just a significant level, right? Like, this is where we bottomed out after this huge squeeze. And, like, this is the target for bears, right? Obviously, right here. They want to break that level. So that's kind of where having this in this higher time frame context has been so helpful for me. Because this is, I mean, kind of stupidly enough, this wasn't really something I was paying all that much attention to. And you can see, like, right around here, this is that level, right? This is let me chart that on the MES chart. That's like right here. So right around that level, we build this head and shoulder pattern that I ended up taking a trade, and then we build, then we have a sufficient structure to really break down. We end up reclaiming it towards the end of the day, which is right there. You see, that's the low of day there. And we end up reclaiming it right here. And that's actually where I was trying to long, but I'll end up getting to that later. But you can see the significance of that level and the context that gives you. So, yeah, just I want to, start off with that, which is just continuing to put more time and analysis and attention to what's going on at these key points on the chart. Um, so yeah, start off obviously super aggressive selling here. Um, you know, it, this is for me. It's like, all right, I'm looking for these sorts of trend continuation trades, like the teal channels here that I have, posting it to the top, failed breakout, and continuing lower, or just these very simple pullback scalps to the short side where we have a little channel here, and I take the break, um, which is indicated by this red circle here. So the first thing I was actually looking for was this red. I had posted this red channel I had gotten it from here and here, and ended up, uh, putting it on this middle band, which gave us this line here. I had jotted this orange, put it through here, and my kind of logic at the time was like, oh yeah, this is a head and shoulder, but really in hindsight, I mean, this structure completes here, and more so than anything, this is just liquidity and chop. This is just a flagging after what we had was this pretty strong bull move here, relative to what we have the rest of the day. So this is just flagging, and I came pretty close to actually shorting. I actually did short here, but thankfully my order ticket was like on the wrong ticker. But I actually did short here on the touch of this red, and this is, I was talking about this in my review that I wrote up. I'm trading in liquidity here, versus when I short here, I'm trading into this liquidity. With this short, this entry is grabbing and trading into all of this liquidity, right? Here I'm just in the liquidity. I'm not going into it, right? That's kind of the distinction. So now I'm just trading in this chop, in this back and forth, up and down. So I avoided, thankfully I got lucky and I avoided that. And this red algo here, especially with this chop, there was this breakout. I wouldn't really consider taking this given the context, but it did end up working here. But I saw very clearly this orange from the top, middle, and then the outer band. Took the outer band short, grabbing this liquidity from the upside, right? So it's like this. The liquidity, the chop is over here, and we're grabbing it from the top, right? We're coming into that liquidity. We're not trading in it, right? Which is like over here. We're trading into it from the top. Protected right at around low a day, which was 2R, and then I just, this was a day that I could more confidently bank on a runner, trade a little more aggressively, and I got pretty lucky. I just managed that. We were hugging Kelt bottom here, and I just exited. I have been watching order flow a lot, bookmap, things like that. This was interesting to see that we had sellers hitting the tape and being absorbed, unable to move price lower. We had retraced up to a level where there was a lot of liquidity sitting on the offer, and we didn't grab any of it. We just, it was like a right up to it, and then we just sold off. So I don't think any of the sellers were filled, but yeah. Then here we retest the red again as a resistance, and we start blocking up on it. But this, to me, there's no real structure here. This is just in the liquidity, right? Just like we see here, just in that chop. And eventually with my red, we do get the reversal because we're at the bottom of this yellow and holding the support. But again, this obviously would have been profitable. Both of these longs would have been profitable, but for me, they were just too counter trend. They're not trades that have enough confirmations for me. This I liked. It was okay. I just shorted here with this yellow. I initially should have had this orange, right, from here and here, but it just felt too strong for me. But yeah, I got off a break even, and this is where I really want to talk. Once we had gotten this higher low, and this is not yet confirmed to be a higher low because we haven't formed a higher high, so there's no real indication of trend change here, right? Because if you look at this is, well, okay, let's do it from here, right? So this is your top, then we're here. This right here, this pivot is lower than this pivot, so we haven't even formed a higher high yet. But we do break out. This doesn't break above this, so you can't call this a higher high. This is just a potential setup for a higher low, which could lead to a higher high. Here we have a higher low, right? Then the question is, if this is truly a higher low, and the beginning of a new and the beginning of a new trend, then what would happen is that this pivot would have to lead to a breakout of this level, right? This would give us a higher high. And if that higher high leads to a higher low, that's a potential entry, right? Because once we have this higher low, it's still, we can still trade up, form resistance here, and then sell off, right? And this would have just been a lower high or something. Or sorry, what? No, a lower. No, it would have just been a higher low or something. It would have just been chopped in this range. It wouldn't have mattered. Whatever. But the labels aside, the real concept that I'm trying to enforce here and help myself better understand, because I can see it more clearly in hindsight, obviously, is that at this point we formed this higher low. We formed what is a potential higher low, a pivot here, right, which is above this. However, we're below this pivot, and we're still below this pivot. So when you see this is the potential setup, again, for a long entry and a trend change. But you want to see us reclaim this level and this level, these two pivots, right? Break out and form a support there. because this is an indication of a trend change. And that's what we end up getting here. Let me just clean this up after I drew like crazy. So we actually do end up breaking out of my yellow channel here. We close above. I remember I had this late entry because I was watching something on Bookmap that just ended up that being the case, and there was a lot of liquidity here, so I wasn't sure. And then once it got grabbed and it traded higher, then I entered. So that's why I had this entry here. But that's kind of besides the point for me, because still we're breaking out of this level, these two resistances here, right? You can see resistance, resistance, and also breaking out of here would mean that we've now formed that this higher low is validated. This becomes a proper confirmed higher low once we break out of these two pivots, or at least this pivot, right? And that's exactly what we do here. And this is also the cup close, right? The cup completion. So we grab this liquidity, we soak all of the sellers, they come in, and we manage to retest, and we hold this level, right? Not only are we holding this green level, which is, right, like I indicated, that this major level we were watching here, that everyone is watching, so we're holding above it here. Here now we're finally holding it as support for the first time that we see in a very long time, where we actually managed to break above it here, right? We break above that level right here, and now we're holding it as support, right, with this bull bar. And this also coincides with my algo, my yellow channel. So we're holding the yellow channel. We've now formed a higher high, right? Which at the same time we form the higher high, we have confirmed this higher low. We sweep above these two levels, showing that the bulls are strong enough to make a higher high. And we can be looking for a higher low, which would then lead to trend continuation. And a higher low forms not only at my yellow channel, but also at this major green level, which is the April 10th low of day, and that huge level that we were watching out for, the higher low from the massive Trump pump from his tweet. So once this hold, I remember I had just barely gotten stopped out here. I had chased this without the, I don't want to say discipline, but enough of a plan or structure to think like, okay, let's wait until we reclaim these levels here of resistance up top until I go long, because we still haven't had a single higher high. We have not traded above a single pivot the whole day. Here's a pivot, we never traded above it. Here's a pivot, we never traded above. Here's a pivot, we never traded above. Now we eventually do. Once that happens, you want to see it break and retest. Now we have that here. It retests. It forms the support there, along with this critical level. And then we start, rallying to the upside and squeezing here, this end of day short squeeze. Or short covering, end of day short covering. Same thing. But that's the idea of this. So that's where levels, right? High lows, higher highs, context, and the idea that you can't just rely on the line breaks. Like, there has to be structure. There has to be market structure. So this was so important for me. Like, I kept looking back at this, obviously because I missed the big move by just a little bit, but I'm not even upset about my stop out or the way my stop was placed. Like, this was not the right entry. Like, you want to see these levels here, right? You want to see these levels because this is significant. This is the only reclaim of a pivot, which is a lower high the whole day, and the reclaiming of that pivot, trading above of that pivot, in this case, once we have this higher low here, not only confirms this, but also creates a higher high. Here, higher low, and then we trade higher. And this is at a significant support level, a significant level on the chart. So that was a good lesson for me there. Also, I remember very clearly the importance of these cup closes, and the cup closing, if it sweeps that pivot of the cup close by just a little bit and then retraces, it's often a little better because it soaks more sellers. And that's what we have here. And then we hold the support. But anyways, one thing about trade management, I liked my management here. I just got off a break even there once it was starting to show some strength. One thing about here, like if you look at this, let's see. Oh, I was also thinking about, potential shorts once we start trading back in. But there was no real indication of that for me at the time, especially like with stuff like this, right? It was still all holding. We never broke any of these channels here, so I managed to stay out of that. But one thing here, I'm gonna pull it up. Keep mentioning bookmap. Well, this isn't bookmap, but it's like the same thing. So this here is where I entered. And we had this liquidity here, and then aggressive buyers hitting that offer, and we traded higher. I entered. And then we, just chopped around here, traded higher, right into this liquidity here at, I think this was like 55, right? 55, yeah. Absorption, buyers were absorbed. Large buyers at the offer, and we immediately reversed, meaning that they were not able to, these large buyers hitting the offer were not able to move price higher. And keep in mind, this is like me trying to piece in my mind what I'm actually looking at and seeing here. I'm fairly new to this, but I am looking at it every day throughout the trading day and just trying to learn and piece some things together, as well as the Bookmap YouTube. They have actually some really, really good resources there. But yeah, so we grab this here, and pretty immediately we start having aggressive selling, right? High negative delta coming in, and then sellers come in at the tape here and offer lower. This is pretty aggressive, and you can see that here, I'll get rid of this P&L box just so it's, this is a breakout trade, right? I'm trying to break out above this support level. This resistance level, this, what is obviously a resistance level as well, right? This is a breakout trade. And when you take a breakout trade and you immediately see this, right? Long wick above, and then you have another bear bar, and then we continue to trade lower. Like, I should just be exiting like here, I should just get out, right? For what in this case would probably be a, 4-point loss, as opposed to, because this is showing that the breakout has failed. And not only can you see that on the bars here, right? If you break out and you have a huge tail above, it means that sellers were just shooting all the buyers down, very clear here on the wick. But it also shows, you can also see it on Bookmap that this liquidity here was grabbed. Buyers were hitting the offer, absorption, immediately unable to move price, immediately reversed. Large sellers coming in, large sellers offering lower, putting liquidity on the tape. And then also coming in aggressively here. And once we, maybe you can wait for this, see this reaction here. But once we have this and we break lower and you start seeing more aggressive selling here, right, via these large bubbles. This is at like 48, 47. That's at this point in the chart. Let me get rid of this. So that was at like, right, this right here. We have the break of structure to the downside, large sellers coming in. You're already seeing that this breakout has failed via these wicks. This is at 327, so that's like right here. And this is at the price of 40, yeah, it looks like 47.75, 47.75. So that's like right around here. At that point, like, you should just be getting out. Rather than waiting for it to go, how many points lower? 47.5. Yeah, like another 3 points. I think that's reasonable. That if you enter this trade and you have your stop, like let's say, and that's one thing I'm working on with trade management, is just being able to cut these losses a little sooner, especially when it just shows that the trade is not working out at all how I planned. So like if I entered here, and I did enter here and I got stopped out like right there. If you see this and this is a breakout trade, trying to break out of this resistance, again, this resistance, and you have this, and like I said, you have this, and the sellers come in lower, blah, blah, blah. You just have like this aggressive high negative delta here and then here. It's just like, all right, you know, this breakout is failing. There's sellers here that are coming in aggressively. Rather than like, we'll let this go all the way down, like it's like, all right, the breakout is failing. I am just going to get out and reposition. And if I bring that to like exactly 47.75 loss, that is a 4-point loss, right? As opposed to a 7.5 loss. And you know, sometimes it's going to work out nicely. Other times you're going to get stopped out for a small loss and the trade is going to work nicely in your favor. However, I think in most cases, more often than not, when the context and the structure of the trade reverses like that, I think it's worth it for me to just be like, hey, you know, I'm just going to cut this. Like, this isn't doing what I wanted it to do. Like, the best trades are like this, you know, they just move. Like, this trades, it just moves, you know, and then you can get a better idea of what's going on. But when you start getting these huge rejections on a breakout, what's supposed to be a breakout, and you have this massive upper wicks showing that the breakout is failing, and then this stuff here, which I'm working on and trying to learn on the order flow to confirm that, just get out. But yeah, anyways, thank you very much for listening. This is just a quick trade review and, you know, trying to learn things as I go on. So thank you very much. Cheers.